Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, March 16th. The year's 2020. Let's talk trading. Walmal method day 3. Well, it's just after the top of the hour. So how about I skip ahead and let's look at the Walmal method here. Right here, we've already got a trigger at 70. So you see, this is where price open and it's triggering at 70. And you notice today is crazy because we haven't we just have these really nice high ranges, and you can see right here it had popped down. So we had a you would be short at the 70 and a low of 65. There was an opportunity to take at least 3 to 5 pips right there, and so you can see here price is reversing. But I just noticed something. I've got the old template up. Let me pause and put up the current template. Okay, fellow traders, now you see we've got a long trigger here at the 2280. And just remember, boys and girls, these videos are for educational purposes only, and your results may differ from mine. And that trading's very risky. You can lose all of your money. So if you need trading advice, financial advice, investing advice, seek it from an accredited financial professional. That way, if you take their advice and lose your money, you know you took the advice of an accredited financial professional instead of some guy with a funny name who posts trading videos out on YouTube. Okay, boys and girls, also remember and never forget that when you're trading, you always have to have your risk management in place. Like I said, I kind of changed up the order of the screens. You can't lose any more in any one trade than you're willing to lose. So back to the Walmal method. We already had a short good for 3 or 5, and right now we had a long trigger here for 3 or 5. That's it. You're done for the hour. You just made yourself somewhere between 5 and 10 pips. Now, just how difficult was that? It wasn't, was it? Now, if you stayed in the trade, you're up 14 pips. You see, this is the problem with this method. It doesn't require you to think to get into the trade. You see, most methods, they require you to think. They give you these indicators and they give you a whole bunch of criteria, and you wind up being confused. And worst of all, you wind up losing money. But you can see it right here. You go long at the line. Okay, that was the line. Here was the open. You went short for a couple of pips. You went long for a few more pips, and you could be done for the hour. Now you've got, let's see, that was 5 minutes into the hour. You're pretty much done. You got 50 minutes or so to go play, nap, read a book, drink coffee, whatever. Just shut down your trading screen, and if you want, come back next hour. Now, granted, this is Walmal. This is when he likes to trade, but I trade the New York session, so I actually trade a couple hours past his GMT, but he gets up early, so he's done. That's his, so I have to kind of make it my own. Look at this, 20 pips to the good. But don't expect this every day, boys and girls. Once again, you know, with this coronavirus and the markets are just going crazy. But this reminds me of the good old days, this kind of movement. But, you know, the range is 36 so far this hour, 61 the last, 78, 83. I mean, there's just money to be made. And it's just not that difficult. And so if you came here and you took your 3 pips because price reversed, and now you're mad, that's what's going to burn you. That will burn you every time. Now, a few traders said they really liked that I said it, so I'm saying it again. This method is a scalping method. We're using it to take somewhere between 3 and 5 pips off of the pound dollar quickly and with relative low drawdown, because we have a the circuit breaker, 10 pip max right there. So that's hopefully the worst thing that can happen to you. Of course, with the way price is moving, you could get a spike and you could go against you. But we're saying here 10 pips max. And now you can see prices moving back the other way. It's so simple. The thing is, you have to get out of your own way. Now, of course, if you had your stop loss set up here at break even +1, you could still be in this trade. You could have been up 10, you could have taken 20 pips off of that. Now, if you would, instead of entering it all in one trade, if you would have broken it up, maybe you would have taken some profit at 10, maybe you would have taken some profit at 20, maybe you put in a trailing stop of 5 pips or 10 pips or however you want, but why would you give back 10 pips? Or why would you even want to give back 5 if you don't have to? But the point is, this method was designed to do one thing and one thing only, and that's 3 to 5 pips on a regular recurring basis. So Walmal could walk away with 10 pips a day, 50 pips for the week. That's his goal. And he's been hitting 20 or more pips just because of this nice, crazy price action. But as you can see, you don't even need this line, but this is just kind of for demonstration purposes here. But if it's green, then you want to buy. If it's red, you want to sell. So if you need that help, there it is. And once again, this is going to be the freebie indicators and templates that I'm going to, as soon as we get it totally nailed down, I'll probably go ahead and post it. And then all you traders who want to use this can go out and use it. Of course, I do have the hold on just a second, boys and girls. Hey, fellow traders, I had to take that phone call real quick. Okay, so wick zones, you can see in and out. We missed that weekly pivot. As far as the daily, we took it out. There's the daily pivot taken out there. And there's the monthly pivot way up there. We've already hit that, so that's inconsequential. Green rats enjoyed some nice movement a few times today. Hope you got your cheese. The buy zone triggered long a couple of times, but with the pivot down here and with that gap, we would ignore that and we were going short. Look at the range. Only one pair under 100. The new beast, 540 pips. These are the kind of days where you can almost make your year. You ride something, just one lot, and that's, every 100 pips would be $1,000. You're talking $5,000 in a day. No inside bars to be had. We're still putting in that daily range here. It's going to be over, 200 for the pound. 205 at the moment. We made another yearly low. And there's still a few gaps that haven't filled. But the main thing we're looking at is the Walmal method. And we can bring the chart in here. And you can see here, 1, 2, it was over in about 5 minutes. And once again, looking at the 1 minute chart, you can see this consolidation here. You can see we had some here, some there where price just was kind of range bound. And here we had a nice breakout, range, breakout, range, more range. And in fact, I'm working on an indicator that when I get done, it's going to be pretty cool. And my phone is ringing again. Okay, fellow traders, back to you. Look at what's happened. We fell back through the sell line. And once again, it's one of those, what do we call it? No-brainers. Right here, the sell was triggered. You'd be up 10 pips. I mean, that's just how simple it is. This isn't hindsight. This is what you do. You have the buy line, you have the sell line. Once again, things aren't normal in the respect that we've got these huge hourly ranges, but we'll just take advantage of it. In fact, right here, there's a nice little turn trade or rat reversal here. Red candle closes, green candle, long at the high. See, we would have been between the 50 and the 60, and it's already crossed the 60 line for 6 pips. But that's not the Walmal trade. But basically, price has to range. It's not going to stay between these two lines for very long. You can see here, there was a few minutes. We're on the M1 candle, M1 chart, and price just doesn't want to stay. So, boys and girls, that's pretty much it. It's such a simple method, but our minds will mess with us. And if you could just say, okay, I see these ranges, these hourly ranges. I know we can't fit any of these inside here because this is only 10 pips. None of these numbers fit inside 10. They don't. They stick out. So if we switch over to the hour chart, you should be able to see that much better. You see where price opens. You see how price ranged. Even here on, there's a couple small ones, but price started here and it still ranged outside. Because all we need is a range about 13 to 15 pips, and we can pick up our 3 to 5 pips. We can do it hour after hour after hour. But remember, boys and girls, these videos are for educational purposes only, and your results may differ from mine. So what makes it hard? Once again, we're people. We want to do something. We want to make something happen, but we can't do that in trading. All we do is we place our trade, and then we see what happens. And that's what makes people a little anxious, because they think if they do something and they read some indicators that got squiggly lines or arrows or something here and here and here and here and here and down here and maybe over here, that somehow all that's going to make their trade profitable. It's not, because the only thing we can do is control the size of the loss. That's all we can do. So when we trade, we make sure we have our stops in place. And as as Walmal says, if you see it going against you, he has these exits. But take the small loss, because a 3 or 4 pip loss is easier to make up than a 10 pip loss. And that's the thing. It's kind of like, yeah, you might take 2 steps forward, 1 step back, but it's better than taking 2 steps forward and 4 steps back. And if you can just internalize that, and then sooner or later you're going to go, oh yeah, I see it, I get it. And then you'll never look back. You'll laugh at yourself. You'll wonder why you got caught up in it. It's because you're human. Don't beat yourself up too bad. I mean, we've all been there. We've gone after the squiggly line indicators or some method with some fancy name or something, because they come out week after week after week. And these guys with these trading robots, oh, there you go. Just open your mouth and let them insert the hook, and then they're going to set the hook and yank on it. And they're going to pull that wallet right out of your back pocket and empty it. That's what they're going to do. But anyway, boys and girls, fellow traders, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, subscribe, click like, and then share the video all over the internet. Make these go viral.